The warning signs are everywhere. The stock market is tanking, corporate CEOs are sounding the alarm, and the very policies that this administration swore would bring prices down are now being conveniently forgotten.
President Trump is warning that the trade war may just escalate in the coming days. Tariffs may go up, and they're very unlikely to go down.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition because what we're doing is very big.
Should Americans brace for a recession?
There's going to be no recession in America. What there's going to be is global tariffs are going to come down because I would never bet on recession. No chance.
The Canadian government has rightly retaliated, and my government will keep our tariffs on until the Americans show us respect.
2 weeks ago, the Atlanta Fed expected the U.S. economy to grow by 2.3% in the first quarter of 2025. Now they're predicting a 2.8% decline. Now that's not a slight shift, it's a complete reversal. So the real question is, are we headed into a full-blown recession, or are we already in one and they just don't want to admit it? Well, let's start with what the markets are telling us. Wall Street is not known for being sentimental, and investors are clearly getting spooked. Over the last month, the S&P 500 is down roughly 5%, the Nasdaq's down almost 8%, and the Dow Jones is almost down 4%. Now, the main concern is the uncertainty. Day to day, Trump's policies are changing rather drastically. Tariffs are on, then they're off, then they're back on again. Countries will retaliate with tariffs of their own, and then reciprocal tariffs get announced. But I'll get back to tariffs in a moment. The volatility index, which is also known as the fear index, is up almost 50% over the last month. Now, this is considered a signal that investors and institutions are now hedging their financial portfolios against anticipated market volatility. If investors truly believed the current policies were setting us up for economic growth, well, stocks wouldn't be plummeting and the VIX wouldn't be rising. It's not to say Wall Street can't get it wrong, but it's not looking too good. And what are the CEOs of some of the largest companies saying? Well, more uncertainty. Walmart, which is the bellwether for consumers, issued a cautious outlook for the year just a few weeks ago. Their CFO said on their earnings call that their outlook for 2025 assumes a relatively stable macroeconomic environment, but acknowledged that there are still uncertainties related to consumer behavior, global economic, and geopolitical conditions.
If Walmart says, quote, "we are in an uncertain time," that is a potential red flag. And then you zoom out, you couple this with the retail sales numbers that we got for January, biggest drop we've seen in 2 years. And then the data that we're getting on how consumers feel about inflation, they think inflation is going to be about 4%.
Now, to be clear, they are still expected to grow sales and profit this year, but the rate at which they forecasted was well below Wall Street's expectations. And this has resulted in their stock dropping over 10%. Now, this earnings call was also before Trump reenacted his initial tariffs, which will undoubtedly affect Walmart. And on the call, Walmart acknowledged that they would not be immune to these tariffs. But of course, Walmart can handle these tariffs much better than smaller businesses can due to their scale and size. Now, additionally, during Costco's earnings call, which was just last week, they highlighted potential challenges due to inflation and tariffs, which could certainly impact consumer spending patterns. Their CEO noted that such economic factors might make consumers more selective with their spending, stating, "When it rains on everyone." Costco is, of course, another company that will be affected by these tariffs. And shares of Ford, GM, Target, and Best Buy all dropped after the companies had to announce their prices will rise due to tariffs. And we can't forget the housing market. Mortgage rates and home prices are still sky high, locking people out of home ownership. The housing market, broadly speaking, has slowed somewhat. Homes are on the market for longer, but home inventory is still well below the pre-pandemic levels. But let's really talk about these tariffs for a moment. Trump's latest round of tariffs is being sold as an America First move that's meant to penalize the countries that allow fentanyl into the US. But if that was actually the truth, then why would Canada be getting hit with these tariffs as less than 1% of fentanyl comes through the Canadian border? Meanwhile, about 97% comes from Mexico. Now, this administration wants to frame this as a drug war, not a trade war, which is an interesting branding choice considering America has a terrible track record with drug wars. But they don't really seem to care about any record. But I gotta be real here. If fentanyl was truly the motivation behind these tariffs, why has there been no mention of healthcare for the Americans struggling with this addiction? If this is a drug war, shouldn't we also be treating the people caught in the crossfire? I mean, I haven't seen any serious healthcare policy proposals from this administration addressing this crisis. But okay, I digress back to the tariffs. Here's what this administration doesn't seem to want to admit. Tariffs are a tax on you. I mean, sure, the importing business pays the tariff, but these businesses don't just eat these costs out of the kindness of their hearts. They pass them straight on down to the consumer. Some companies have already begun raising their prices before these tariffs have come into effect. And if anybody watching this is believing the administration when they say, well, prices aren't going to rise, listen to what the CEOs are telling you, because they control the businesses and they are telling you prices will rise. But even if the people who support this policy want to make the argument that these tariffs are just negotiating tactics, well, first, I would say we're a little far past that. But second, more importantly, once these price increases go into effect, are you really betting on corporations lowering their prices back to the levels they were before the tariffs were applied? But this administration also wants to argue that tariffs will bring jobs back to the US. So let's break that down. First, most of these jobs would be union jobs, which, by the way, currently is at an all-time low in the US because companies hate paying fair wages and benefits. But even if they weren't union jobs, labor costs will rise no matter how you slice it. I mean, part of the reason, but certainly not the only one, that so many of these manufacturing jobs are outside of the US are because the wages are so much lower in these other countries. So even if the jobs could magically come back, which most won't, what do you think will happen first? Cuts to profit margins or increased prices on goods? I mean, if slapping tariffs on imports was such a brilliant economic maneuver, why is the market reacting like it's a disaster? Why is consumer sentiment cratering? I mean, if this were truly going to boost the economy, we wouldn't see the market contradicting that narrative. But instead, we're getting another round of "we know better" from an administration that promised relief, but seems to be doing the exact opposite. Look at what happened the last time tariffs were hiked under Trump's administration. Manufacturing jobs didn't just flood back to the US. In fact, the US saw net job losses. And meanwhile, prices sure went up for consumers. But this time, with inflation already squeezing households, adding more price hikes is like throwing gas on a fire. Remember, this administration ran on a promise of making life more affordable. Whether they could actually do it or not isn't up to us, it's up to them. Gas prices have dropped slightly from a month ago, according to AAA, and groceries are supposed to be cheaper, but they aren't. Egg prices are at an all-time high, and forecast for February's inflation report is feared to be hotter than expected. And the worst part is, they don't seem to really care anymore. When inflation was the number one issue and someone was trying to get elected, they had a lot to say.
And I went on groceries. It's a very simple word, groceries. Like almost, who uses the word? I started using the word, the groceries.
But now with prices still elevated and fears of it getting worse, the narrative has definitely shifted. They're now telling you there might be some pain. There may be a little disruption, but they're okay with it. They're pointing to tariffs and tax cuts as if that somehow erases the fact that your paycheck buys less every single month. Now, I want to be clear, the last administration didn't have inflation handled either. But when you compared the US to other countries, the US did rebound from it much better than others. The problem with it is that it's been much trickier getting it down to the Fed's target rate of 2%. It appears to have stalled out over the last few months, and now the fears of it ramping back up are in full effect. And then there's the so-called government efficiency push. The federal government is the largest employer in the country, and thousands of federal employees, many from departments that actually keep things running, are being fired. Sometimes firing the very people who voted for this administration. So even though this has been phrased as government efficiency, it really isn't. It's a way for Musk to deregulate and a way for Trump to gain more power. While they sell this as a way to reduce government bloat, it's actually going to hurt the economy in the short term and could have long-term impacts across a multitude of sectors, which I don't have time to get into in this video, but there could be some very serious repercussions. So why are they cutting jobs? Well, they're saying it's to rid the government of waste, fraud, and abuse. But despite their claims, they haven't found any fraud. It's probably worth mentioning, fraud is a crime in the United States, and there have been 0 arrests for any government fraud. Most of the waste has been grossly over-exaggerated figures that they've had to quietly walk back after they've put out the wrong information first. So why are they doing this then? Supposedly to create savings and reduce the federal deficit. But here's the irony. Trump added $4.8 trillion in new 10-year borrowing during his first administration when you exclude the COVID relief. When you compare that to Biden, his was $2.2 trillion when you excluded his COVID relief. And yet they expect you to believe this is about fiscal responsibility. So in reality, they won't cut any meaningful amount from this chaos. It's just another way for the rich to squeeze the middle class while pretending to fix the mess they helped create. Now, I want to be clear, I don't have a problem with less government spending. But what I do have a problem with is where these cuts are coming from. Firing over 63,000 federal employees means less money flowing through the economy. It means higher unemployment, which of course has a negative ripple effect throughout the country. And I mean, let's not pretend that this is some noble effort to cut waste, because the real spending cuts never seem to happen where it matters most. Let's just do a frame of reference. Let's assume Doge stops at 65,000 job cuts, which would be on the low end. And let's take the median pay of a federal employee. It's roughly $100,000. So in total, from the 65,000 Americans who would get fired, the government would save $6.5 billion a year. Now, the proposed budget for the Department of Defense in 2025 is $850 billion. So cutting 65,000 jobs wouldn't even equate to 1% of the annual defense budget. These cuts don't hurt the politicians or the lobbyists. They hurt the middle-class Americans who now have to figure out how to survive in an economy that's offering them fewer opportunities, not more. So to answer the question, are we already in a recession? Well, technically, no. A recession is generally defined as 2 consecutive quarters of negative GDP growth. And if you listen to the White House, they'll tell you everything's fine. But if you look at the actual economic indicators, the stock market, consumer sentiment, CEO warnings, layoffs, GDP trends, I mean, all of it is painting a very different picture. So brace yourself, because whether this administration wants to admit it or not, the economy is in trouble. Markets anticipate the future, and what they're telling us right now is the future doesn't look too bright. The next few months will tell us just how deep this downturn is likely to go, but make no mistake, this is the result of bad policy, moving fast and breaking things in our federal government. And if history tells us anything, the people who caused this mess won't be the ones paying for it. Now, if you want to learn about the insane disparity of wealth inequality in America, you can check it out in this video here. Thanks for watching.